Thank you for joining us at XM.com for today's market comment by Harlan Bospiceros. I'm Maria Pachordez. The US dollar continued drifting lower against most of the other major currencies on Tuesday, as several Fed officials appeared in their dovish suits this week. Following remarks on Monday by Fed Vice Chair Philip Jefferson and Dallas Fed President Lori Logan that the tightening in financial conditions due to the surge in Treasury yields might negate the need for additional hikes, Atlanta Fed President Raphael Bostic and Minneapolis Fed President Neil Kashkari expressed similar views yesterday. That said, Kashkari added that if higher long-term yields are higher due to expectations about what the Fed might do, then they may need to satisfy those expectations in order to maintain yields at those levels. The slide in both the dollar and yields following the latest Fed rhetoric suggests that indeed the market may be mainly driven by such expectations, and thus calling with certainty the end of this hiking crusade and a trend reversal in the dollar may be premature. Currently, investors are assigning around a 30% probability for another rate hike by December, but that could well change if upcoming data suggests that inflation is stickier than previously thought. Traders may be sitting on the edge of their seats in anticipation of tomorrow's CPI numbers for September, and will get an early glimpse of where inflation may be headed, as the PPIs for the month are due today. The headline rate is forecast to have held steady at 1.6% year over year, while the core one is anticipated to have ticked up to 2.3% year over year from 2.2%. The minutes of the latest FOMC gathering are also on today's schedule. The currencies that took the most advantage of the dollar's slide were the risk-linked Aussie and kiwi, which may have been helped by a report saying that China is considering new stimulus measures to shore up its wounded economy. With recent data suggesting that the world's second-largest economy may have begun bottoming out, Aussie and Kiwi traders may now turn their attention to China's inflation and trade numbers, due out on Friday. Wall Street closed in the green on Tuesday as equity investors cheered the prospect of no more hikes by the Fed. The gains also suggest that investors may have turned their focus away from the conflict in the Middle East between Israel and Palestine, despite Israel retaliating against Hamas with missile attacks in Gaza. Thanks for watching today's market comment here at XM.com.